What's up guys, my name is Nick and welcome to my channel. Given the explosion in the number of smaller trading accounts that I've opened this last year, and I would define that as any account smaller than $25,000, I thought it'd be interesting to create a 10K challenge on the channel. I'll be trading for absolute returns and trying to build an account from $10,000 initially to $25,000 and then beyond that. In this video then, I just wanted to lay out the ground rules of the challenge and show you where we are currently in terms of returns year to date. This video is a little different from those I've done in the past, much more practical. If you like this type of content though, do me a huge favour, smash the like button and subscribe to the channel. It's free of course, but it helps me out a ton. With that said, let's get into the video. Building a 10K account trading options. Okay, so as we can see from this screenshot, the account has an initial net liquidation value of just over $10,000, $10,109.04 to be exact. By the way, this is an options trading blotter that I've written and that is available as a free Google Sheet shared file. If you're interested in journaling your trades and tracking your results, I'll include a link to the video somewhere up here. Notice that there have been additions to the account of $2,000. This is an important part of the process of growing any small account. So additions will be made on a monthly basis of $1,000 on the first of each month. So year to date then, $1,000 has been added to the account on both the 1st of February and the 1st of March. While we might differ in opinion on whether $1,000 is an affordable amount to contribute on a monthly basis, I want the takeaway here to be that it's essential to make regular contributions regardless of their size. Just commit to an amount and stick to it. We can't force market returns over a specific time period, but what we can do is commit to saving and paying ourselves first. Regular additions mean that if the size of the trades that are taken are based on a risk as a percentage of the account, then regular additions help to compound and grow the account exponentially. The size of future trades can be larger as a direct result. The current return year to date as of March 1st, excluding these additions, is currently 52.54%, an annualized return of almost 310%. While I'm of course delighted by these results, they're significantly higher than I might have expected after just a couple of months. Let's not confuse brains with a bull market here. Rather than pat myself on the back, I've spent more time analysing my risk per trade and increasing the allocation of funds towards a downside hedge in the form of long fixed call strips. I do, however, expect my returns to fall and correct towards a respectable but considerably lower long-term mean yield. If we look closer at the breakdown of the trades, this is where it starts to get interesting. Firstly, note that there have been 57 trades year to date. Surprisingly, given the return on equity, just 29 of those trades, just over 50%, have actually been profitable. Let's face it, my entries are barely better than a coin toss, but let's take a deeper dive into the numbers. The maximum winner was almost 5 times larger than the maximum loser. In fact, the maximum loser was less than the average winner, and that average winner was some 3 times larger than the average loser. The point I'm trying to drill home here is that trading is not about being right. Clearly, if being right means buying the right thing at the right time, I didn't achieve that goal. And actually, if I gave my entry criteria for a trade to 10 different individual traders, I'm fairly certain 5 of those traders would lose money, 3 would roughly break even, 1 would be up small, and 1 would be up huge. And the reason for that difference is the importance that exits, risk management, and position sizing play in the trading process. I would suggest 90% of the returns in this account can be attributed to those factors. They're that important. Okay, let's actually jump into my Tastyworks trading platform now and take a look at what's been behind these returns. The first step in building an account is creating a watch list of extremely liquid stocks and of course their associated option chains. Additionally, they should be priced such that a smaller account can effectively trade options on those underlyings. In the case of a 10K account, for example, I would suggest $50 as a reasonable cap on the price of the stock that you follow. Once you get much higher than this, option premiums become too high, and for example, credit and debit spread widths need to be too tight in order to pass risk management criteria. To use an extreme example, in a $10,000 account, it would be difficult to set up an effective option spread in Amazon stock that has just a 2% or $200 risk associated with it. Even in just a single contract, the width of this spread will be way too narrow in the context of Amazon's stock price and volatility. Additionally, note that by building a watch list, we're not focused on the irrelevant noise surrounding the latest in vogue meme stock. Now, We build a list and become familiar and comfortable with the price action of those counters over time. I've already created a video about building a watch list for smaller accounts, and we'll include a link up the top there. Okay, so looking at the breakdown of the 57 trades, I don't want to get bogged down in too much detail. That's for another video, but they are essentially momentum-based trades, looking for stocks that have a push higher in price and expect this trend to continue in the short to medium term. I'll then look for an appropriate strategy to take advantage of this move depending on the absolute levels of implied volatility and IV rank. Interestingly, this year so far, just 7 of my trades in this account have been short premium positions. This is significantly less than I might have expected, but is a result of the current market environment in which we find ourselves. While 5 of those were winners, 1 was a loser, and I currently have an open put credit spread into SLV, the current volatility environment hasn't generated many decent risk-reward short premium trades. While it's true that the VIX has been above its long-term mean for some time now, there is clearly support in the low 20s. Volatility is relatively low then, in my opinion. In fact, the VIX traded below 20 for the first time in almost a year just within the last couple of weeks. Additionally, we have seen a lot of bullish momentum in a number of sectors in the market, and this has meant a long call buying strategy has been extremely effective. I will typically then turn these trades into cheap, low risk or risk-free debit spreads by selling a higher strike call against the initial long option when the stock starts to look overbought. Note this strategy also avoids breaking the PDT or pattern day trading rules, which is a concern for accounts smaller than $25,000. It's important to realize that this strategy is unlikely to be effective forever though. If we consider there are 3 basic market directions, bullish, bearish and neutral, and on a very binary level either high or low implied volatility, then there are broadly speaking 6 market environments through a combination of these variables. To be clear, buying call options will only work in one of these, a bullish market where volatility is relatively cheap. How this ultimately pans out, I'm not sure. But since this account trades 3 independent systems, as and when the market type does change, so each system will come into its own. It's important to have different trading styles to account for these different market types. To try and trade just one single system in all environments is unlikely to be consistently profitable or the most effective approach over time. Guys, if you made it this far, you made it to the end, and your support is very, very much appreciated. I wanted this to just be a very brief introduction to the 10K challenge, and while some of you may be frustrated by a lack of detail at this stage, I will add more in-depth videos going forward as I update the account returns each month. Ultimately, my objective here is to establish my credibility, and the best way to do that is by being honest and open and by sharing my trading strategies and results. If you want to be sure to catch those updates, please subscribe to the channel down here. If you're new to the channel, I've also included a link to other option-related content somewhere over there. In the meantime, I'll see you on the next one. Stay safe, guys. Take it easy. Cheers.